Good morning, and welcome to our webinar on a deep dive into SASB Standards. My name is Corrine Brown, and I am the Interim Director of the CPA Ontario Centre for Public Policy and Innovation in Accounting. Our centre aims to foster dialogue on the future state of the accounting profession. Stakeholders are increasingly holding corporations accountable for sustainability and social values. And so what greater role is there for our profession today than helping to drive social and environmental change? But to do this, we need high quality standards, such as those provided by the SASB. In this webinar, we have a unique opportunity to contribute to the dialogue on how SASB can more effectively help investors integrate ESG data to inform their decisions. We are pleased to present to you experts and thought leaders today. We've got Mr. Robert Hirth, the co-vice chair of SASB and the COSO chair emeritus, and Mr. Neil Stewart, director of corporate outreach of the Value Reporting Foundation. The discussion will be moderated by our very own Dr. Samir Trabelsi, professor of accounting from the Goodman School of Business, who is passionate about sustainability and who conducts research in the area. Before we get to the panel discussion, we are also honored to be joined by leaders from Brock University and CPA Ontario, who are ardent supporters of the work our center does. First, we will be welcomed by Dr. Lynn Wells, interim president of Brock University. Dr. Wells will be followed by Dr. Andrew Gaudes, dean of the Goodman School of Business. And finally, representing CPA Ontario is Mr. Craig Smith, the Executive Vice President of Member and Student Services. I will now turn it over to Dr. Wells.
Good morning, everyone. I'm pleased to join you today for this webinar. We have an outstanding team of individuals with us today to present on this topic, and I'm looking forward to hearing their perspective and to learning from their insights. This webinar is a continuation of our successful webinar in 2020-2021 on sustainability reporting and thought leadership in this area. Our eminent panelists will focus on the latest developments in the fast-changing world of environmental, social, and governance reporting for investors. ESG disclosure is extremely important, but without widely accepted standards and proper national and international enforcement. Thus, there is a serious risk of firms not providing material information. Not only that firms may engage in greenwashing or corona washing. Of course, defining widely accepted standards is not an easy project with which to begin. With investor intention globally coalescing around SASB standards and the TCFD recommendations, we are looking forward to a stimulating talk on the rapid corporate adoption of SASB standards based on industry-specific, financially material ESG issues. SASB standards aim to provide users of business reporting with in-depth information about the impact of a company's action on society and the environment. They address environmental and societal issues and come at a time of increased stakeholder concern about companies' business practices. Companies and investors around the world now have codified, market-based standards for measuring, managing, and reporting on the sustainability factors that really drive value and affect operational performance. SASB standards are not a simple disclosure measure to satisfy reporting and accounting requirements. They also provide useful additional information to various stakeholders. The goal is for companies to provide reliable statements that enable optimal resource allocations. As the president of Brock University, I want to thank CPA Ontario for their generous support of the Goodman School of Business. It is also gratifying to congratulate the accounting department at the school on the organization of today's event. Thank you to each of the speakers here today. I look forward to listening and learning from your insights and experience. Thank you.
We'll now hear from Dr. Gaudes.
Wonderful. Thank you. Thank you, Corrine. Welcome to the Goodman School of Business and Brock University. I do want to acknowledge the land on which our university is located. It's traditional territory of the Haudenosaunee and the Anishinaabe peoples, where many continue to work and live here today. Territory is covered by the Upper Canada Treaties and is within the land protected by the Dish with One Spoon Wampum Agreement. Today, this land is home to many First Nations, Métis, and Inuit peoples. And acknowledging reminds us that our great standard of living is directly related to the resources and friendship of Indigenous peoples. Thank you very much for joining us today. I also want to take a moment to remember and honor a great friend of the Goodman School of Business and Brock University, Mr. Paul House, who passed away yesterday. Paul was the chairman and CEO and president of TDL Group Corp, which you probably know better as Tim Hortons. He served as a member of our Dean's Advisory Council from 2005 to 2016, was our inaugural Distinguished Leader in 2007, which we continue to this day. He sat on our University Board of Trustees and received an honorary degree in 2008. He's remembered as a strong and effective business leader and having had a significant impact on the company he loved and our community. And thinking about impact, once again, thank you very much for being here for this webinar on SASB Standards Deep Dive. You know, the GRI, the Global Reporting Initiative, started almost 25 years ago as an international nonprofit organization who's empowering decisions that create social, environmental, and economic benefits for everyone. So it's almost 25 years. It's 10 years since SASB, the Sustainable Accounting Standards Board, was created. It's 6 years since the Task Force on Climate-Related Financial Disclosures and Sustainable Development Goals was initiated. So we've been talking about this for quite some time. I'm really ecstatic at the fact that we're coming together to really act on the discussions that we've had to this day. So thank you again for being here today. But my charge to you is that the conversations continue and the actions take place post-conversation today. It's very important that each and every individual here understands the impact they have in the group and the many that they go back to in their day-to-day lives. But if we all go back to our group and our day-to-day lives as individuals, but together on purpose, we will have an impact, just like our friend Paul House did in his life. So thank you very much for being with us today, and I look forward to the actions that will come out of this tomorrow.
Thank you, Dr. Goddess, and thank you, Dr. Wells, our leaders from Brock. Now we will hear from CPA Ontario's representative, Mr. Craig Smith.
Thank you, Corinne. Good morning, everyone, and welcome to this deep dive into the SASB standards and ESG reporting, hosted by CPA Ontario Centre for Public Policy and Innovation in Accounting at Brock University's Goodman School of Business. I'm Craig Smith, Executive Vice President of Member and Student Services at CPA Ontario, and I'm delighted to be here for a conversation I'm sure you've all been looking forward to. Today, our expert panel of speakers will explore what investors are doing to account for social, environmental, and governance issues, how corporate reporting is adapting to more data-driven demands, and the changing regulatory landscape for ESG reporting, among other topics. The past 18 months have seen an acceleration of many social and business shifts that, while years in the making, as Dr. Goddess has alluded to, have reached critical inflection points during the pandemic. This has been the case with remote working and learning and e-commerce, and how we are also witnessing a great social awakening regarding the treatment of marginalized and disadvantaged groups in our society. And within this unprecedented period of disruption, we've witnessed the rise of ESG, the impact of which is rapidly transforming the boardrooms across the globe as businesses begin to account for success and risk factors beyond the traditional bottom line. While it's true that ESG concerns well predate COVID-19, it's also true that a global health crisis, economic turmoil, and greater socio-political awareness have placed more scrutiny on corporate accountability and sustainability than ever before. The same is true of human capital, business innovation, and each of the SASB standards' 5 dimensions of sustainability. At the beginning of this year, CPA Ontario unveiled a white paper on ESG reporting. It's called CPAs and the New Social Contract. This was compiled from more than 40 interviews of business leaders in anticipation of a much broader adoption and demand by organizations across Canada and the world. If you haven't had a chance to read it yet, I do recommend you take a look. It's on our corporate website. The paper argues that accountants possess the unique skill set and crucially the appetite to keep organizations accountable on issues ranging from greenhouse gas emissions to lack of diversity to inadequate social policies and so on. The new warrior accountants, as the paper coins them, will also help keep a company's investors informed by tracking the sustainability issues that are critical to the company's performance, depending on the industry in which it operates. When they were launched, the SASB standards were a major innovation, and they will continue to be the cornerstone of this new world of sustainability reporting, along with competing but supplementary frameworks such as the Global Reporting Initiative and Sustainable Development Goals. We're standing on the precipice of innovation as a professional community, a key moment of change for our profession. Our white paper frequently employs the term warrior accountant in an attempt to encapsulate the much broader professional and social role that ESG reporting implies. By reporting on a large swath of non-financial information, CPAs would be fulfilling a much more nuanced role in relation to organizations, investors, and society. And with all this in mind, it's easy to overlook the formidable challenges that await the implementation of a groundbreaking idea. And this applies to most opportunities for growth following major disruptive events. In the case of ESG, unfamiliar reporting requirements and methods may stymie participation in the Canadian marketplace, especially for smaller companies that lack the necessary resources to do so effectively. And that's what makes a robust, clear reporting framework and standards all the more vital. And progress is certainly being made in this area, as you'll see today. It's vitally important that we continue to spread expert knowledge on this topic with the help of institutions like Brock University, and inspire CPAs and the public to consider how contemporary issues can substantially affect their businesses, careers, and lives. It's my hope that today's discussion sheds some much needed light on this critically important topic. Thank you for attending today and enjoy the webinar.
Thank you, Mr. Smith. And now I'll turn things over to Dr. Trabelsi, who will introduce our panelists. Dr. Trabelsi is a professor in the Department of Accounting at the Goodman School of Business, and he is our sustainability champion. So Samir, I turn things over to you. You're muted, Samir.
Thank you, Dr. Brown. Thank you, Dr. Wells, Dr. Goodies, Mr. Greg, for joining us and for your welcoming remarks. Depending on where you are, good morning, good afternoon, good evening. This webinar attracted around 600 participants so far. They are across the globe. So welcome everybody, and thank you for joining us for today's webinar on SASB Deep Dive. My name is Samir Trabelsi. I'm the CPA Ontario Distinguished Scholar and Professor of Accounting and Governance at Brock University. Just a little housekeeping before we get started. Both the slides and the recording of the webinar will be sent out to you at the end of this webinar. If you have any question during the presentation, please type them into the question box in your life-size control panel. We'll make sure to bring them up during the Q&A session. This follow-up webinar is initiated by Mr. Hirth, who was one of the speakers in our May 26 webinar that attracted around more than 3,500 participants, which is tell that the topic is there. Not only that, yesterday night, Brock University and Mr. Camille sent us an email. Brock is launching this SDG group where faculty members are going to develop curriculum on this very important area. So Brock is among the global leader in this area of sustainability reporting. Now, without any further ado, I will turn it over to Mr. Robert Hirth, Co-Vice President of SASB, and Mr. Neil Stewart, Director of Corporate Outreach at the Value Reporting Foundation, to talk for 30 minutes. Then we're going to have a Q&A session of 20 minutes. Mr. Hirth?
Thank you, Samir, and thank you, Brock University, and everyone that made their introductory remarks today. I'm going to have Neil go ahead and get started, and we'll get right to this. Neil?
Great. Thank you very much, Samir and Karine, and thank you very much to the CPA Ontario Centre for Public Policy and Innovation in Accounting for inviting us here today. So as Samir mentioned, I'm Neil Stewart. I'm Director of Corporate Outreach for the Value Reporting Foundation, which maintains the SASB standards. And I'm joined by Bob Hirth, who's Senior Managing Director with Protiviti and the Co-Vice Chair of the SASB Standards Board. Here's what we're going to cover today. I'll give you an overview of the SASB standards, the corporate adoption, and especially investor support talk to you about SASB's approach. How are the standards structured? How do they work for corporate reporting and other business reporting? We'll look a little bit at internal controls and assurance, and we'll cover our alignment with other standards and frameworks, which is especially important in today's environment. And also we'll look at the changing regulatory landscape, which is changing very, very quickly indeed. So what is SASB? In case you're not familiar with us, we're an independent nonprofit standard setter. We were founded just over a decade ago. We're originally headquartered in San Francisco. Now, after a merger with the International Integrated Reporting Council, or IIRC, we have dual headquarters in San Francisco and London. What we do is provide industry-specific ESG disclosure standards, connecting businesses and investors on the financial impacts of sustainability. So really born out of the market demand from investors for decision-useful ESG information as they began integrating ESG across their portfolios and across different asset classes. For information to be decision-useful for investors, it needed to be industry-specific. It needed to be related and focused on enterprise value or financial materiality. So what do standards do? Clear standards ensure consistency over time, comparability between companies, and they allow investors and management and boards to better integrate ESG factors, make more informed decisions. So just this summer, we merged with the IIRC, a rare merger amongst nonprofits, to form the Value Reporting Foundation. Now, to be very clear, the SASB standards, the integrated reporting framework, still exists under what you might consider like a holding company, a single global organization, but with these different resources underneath it. And what we really were formed to do is to advance a simplified corporate reporting landscape by more closely aligning the existing integrated reporting framework with the SASB standards, as well as, and this is really important, we'll talk a lot about this today, as well as providing active support and participating in the Technical Readiness Working Group for the IFRS Foundation as it launches an International Sustainability Standards Board, or ISSB. We're extremely supportive of that effort. So let's look at the growth in SASB reporting, which has been quite remarkable. We're now at over 1,300 SASB reporters worldwide, just over half outside the US. So SASB standards are sometimes perceived as having a US bias, but the corporate adoption and investor support truly are global. More than half of the S&P Global 1200 index is now reporting, or nearly 2/3 of the S&P 500. And if you look down regionally, you'll see that Canada is definitely a leader with 70%, or 42 out of the S&P TSX 60 reporting using SASB standards. Indeed, Canada is a leader in a number of ways. TMX Group was the first to report under SASB Security and Commodity Exchanges standards, so the first stock exchange in the world to actually report using SASB standards. If you look at some of Canada's resource industries, extractives and minerals processing, one of the 11 sectors that we cover, is one of the top the sector where we have the most SASB reporters, and about 25% of the global number are Canadian. In oil and gas exploration and production, one of the top industries out of the 77 smaller industries, and 26% of global reporters globally are Canadian, and 44% of reporters worldwide in metals and mining are Canadian. All 6 of Canada's big banks are SASB reporters. Also, in terms of investor leadership, 6 out of the 60 SASB Investor Advisory Group members are Canadian. And there was a very important statement made just about a year ago by the Maple 8 pension funds calling for SASB and TCFD aligned disclosure. Now I'll turn it over to Bob to look at the broader landscape of investor support driving the demand for ESG disclosure.
Great, thanks, Neil. Let's look at this next slide. You know, we're really pleased that we like to say the market has been driving the interest in ESG and ESG reporting. This slide shows you the asset managers and asset owners that have signed up for something called the United Nations Principles for Responsible Investing. So you'll see there's almost 3,000 of those types of investment individuals. But I think what's really significant is their combined total assets under management now is over $100 trillion. So got a significant number of people and assets under management that are driving this interest in ESG. And let's look at, so what have these organizations signed up for? So when you sign up for these principles, these are the 6 principles laid out that they're going to incorporate, most importantly, these ESG issues, environmental, social, and governance, into their actual investment analysis and decision-making process, you know, to buy or not to buy, to sell or not to sell. They're going to be active owners in that process. And what they're also going to do is they're going to also do some of their own ESG reporting on their own operations and incorporate policies related to ESG in their operations as well. So that's what they're signed up for. You know, if we look at something that's come up most recently, we'll call it sustainability linked loans. So this is not just green bonds, but this is where we have normal corporate credit, where the achievement or setting of goals and targets related to ESG are part of the loan package or credit in itself. So what you see in many cases, organizations are having some long-term loans where the interest rate is set or tied to or reduced by or increased by various E, S, and G targets. So in some cases, an organization starts with a lower rate because it's agreed to meet certain targets. Other cases, the rate might go up if they don't meet those. I think what's important for the accounting profession, like other aspects of loan compliance, in most cases, the verification of the achievement of those goals would be done by an independent accounting firm. So sustainability linked loans is something that you should all look out for with your clients, and also for the corporations on the call today to think about that as one avenue for lending in the future.
So that's a great look at the backdrop of investor demand right across equity, credit, lending. Let's look at more specifically now the demand for SASB as well as for TCFD, because investor attention, borrowers, or rather lenders and other providers of capital, investor attention is focusing on SASB and TCFD. Many people will be aware of the high profile calls for this from, for example, BlackRock, State Street Global Advisors, another of the top index investors in the world, has asked for SASB and TCFD disclosure, as well as many pension funds and sovereign wealth funds, pension funds like, for example, CPPIB in Canada. But as large and as important as these investors may be, I think of them as the tip of the iceberg, because adoption and demand is very broad and deep right across the market. Why do institutional investors support SASB standards? Here are the 3 reasons: the industry-specific approach, the focus on enterprise value, that intersection between sustainability and the creation of value, and the rigorous, transparent, and market-informed process. And that's where Bob is involved with the organization in a very significant way as co-vice chair of the SASB Standards Board. So Bob, maybe you could introduce us to this process of maintaining, updating the standards.
Yeah, thanks, Neil. So let's look at our process from in a way, start to finish as we look at the standards. So I think what's really important is this is a transparent process. It's organized and structured. It's deliberate and it's consistent. So we approach each item in this way. So over on the left-hand side, we're constantly monitoring what's going on in industries with respect to new issues and new technologies, new reporting items, et cetera. We have a lead analyst for each of our 11 sectors and industries, the way we've organized the SASB standards. And therefore, we then initiate and begin a standard setting project. Sometimes we actually do some research before and have a research project. We go through this very deliberate process of discussions as we're going through this with investors and with issuers and other academics and researchers. We ultimately then propose a standards update. So that's a change or a new standard or some form of revision. We have a required 90-day public comment period, and we've been very pleased with the comments that we've received. You know, our public comment period has clearly improved the ultimate decision-making that we've made on standards. And we work to consider those comments in our final exposure draft, and ultimately then issue the standards update, which then has them codified and becomes part of our library of the official SASB standards. Take a look at what's on our agenda. So our agenda is published at the SASB website at sasb.org. You can see we've divided these into our research projects. So many times these projects 1 through 4 may start out as doing research because we think there's something there that might create a change to a standard. but it may not. But as you can see, we have human capital. Alternative meat and dairy is a very interesting one. So many of you have read about that. And of course, the significant media attention around content on internet platforms. We have some very significant projects in process now that will ultimately create a change or a new standard. As you can see, they relate to systemic risk or tailings and so forth and so on. And then we have a couple other projects, one on our conceptual framework and another related our rules of procedure that are going on. So all of these projects are described on our website. There's a project tab for each of those, and you can get more information at sasb.org.
Great. So that rigorous due process, that transparency is very important to corporate reporters as well as investors who are supporting the adoption of SASB standards. Let's take a look now in more detail about how the standards work. How are they used in corporate reporting or in business reporting generally? So that what they do is SASB standards provide industry-specific disclosure topics and related metrics that can inform what you include in your ESG report or in your integrated report, really giving insight into the subset of sustainability issues that are most closely tied to an organization's ability to create long-term value for investors. So what SASB standards do, again, is to identify the industry-specific subsets of sustainability-related risks and opportunities likely to affect an organization's financial condition, operating performance, or risk profile, or in other words, enterprise value. So this is captured in a visual form, in an interactive form in our materiality map. This is many people's first experience of the SASB standards. It gives you an intuitive sense of the differences in ESG from one industry to the next, because that's the key here. ESG is not one size fits all, especially when it comes to financially material sustainability risks. So you can start to see how for some industries it might be more environmental, for others it might be more social or human capital. Many times you have the same general topic that goes across many different industries, but in different ways. So a good example of that would be climate risk, which manifests itself differently depending on the industry. Here's where we start in terms of the industries, the 77 different industries in our sustainability industry classification system. And we maintain standards for each of these industries. Now, the key point here is that many businesses will use more than one standard. For example, in financials, you might have a bank reporting to the commercial bank standard, as well as to asset management, investment banking, brokerage, mortgage finance, and so on. Or in oil and gas, you might have upstream, midstream, downstream services. Sometimes you have quite unique combinations. They may be healthcare and technology, for example. Other companies might find one industry standard that fits their business model very neatly. For each industry, we have a standard that suggests the minimum set that suggests the set of topics that are likely to be relevant, but it is still up to each business to identify what really applies to its business model. This is where we start in terms of the issues, the broad dimensions of sustainability and the general issue categories. But again, what is SASB's function? We filter these for that subset of relevant topics for each industry. When it all gets boiled down, on average, each SASB standard has just 6 disclosure topics and 13 metrics. The other reason that they're cost effective and efficient for companies to implement is that wherever possible, we base the metrics on existing regulations, certifications, or other industry norms. So the SASB standards have been called an easy on-ramp for businesses of any size, even small cap or private enterprises. Find this a manageable set, find this a focused set of topics to begin reporting on. What is the standard itself? What does it look like? This is it. You have the industry's specific disclosure topics. You have the related accounting metrics that assess performance against those topics. You have the technical protocols that include definitions and boundaries and suitable criteria for assurance if you choose to seek it, as well as those activity metrics that allow, that's really just the size of the business, that allow the investors to normalize the data and be able to compare apples to apples. What does it look like when it comes out? SASB standards come in many shapes and formats. We have standalone SASB reports, or perhaps an index or table at the back of a sustainability report. On some instances, they're part of regulatory filing, and they can be part of an integrated report. The most common format would be a SASB table or an index, often put at the back of a sustainability report. And that this, again, is that list of topics, an average of 6 topics per industry. It has the accounting metrics, an average of 13 accounting metrics with the responses. Now, most of the accounting metrics, about 80%, call for a quantitative response. But the remaining call for discussion and analysis. And even around quantitative responses, our standards application guidance strongly encourages context, color, additional narrative around the numbers. Bob, perhaps you could give a couple of examples of industry standards.
Yeah, Neil, so let's take a look at what do you get when you get those standards. So if you go back to Neil's table, if you go to the SASB website and put in your ticker symbol or the name of a public company, and in this case, it's a software company, you're mapped to the technology and communications sector. You would then see that we have a separate industry example for software and IT services. So to Neil's point, what do you begin to see here? You see some metrics, not just dollars, but so you can see total energy consumed, so kilowatts or megawatts, total water withdrawn. So you'd see, millions of liters of water. Data center environmental concerns would be more qualitative. And then also data privacy and security is a combination of qualitative in terms of your approach, but also some quantitative information with respect to number of breaches and number of accounts affected. And then, of course, as you would think about any talent-based company, information related to employee diversity and engagement. So let's go to the other end of the spectrum and take a look at the mining and minerals example. So again, if you went to the SASB table, looked at your sector, looked at your industry, got to metals and mining, you'd see here things like greenhouse gas emissions, air quality, water management, not just the water used, but how do you manage that water? Biodiversity impacts. I know you're very sensitive in Canada to Indigenous peoples, so there's some qualitative related disclosures on that as well. So it gives you examples, and this is why we think investors like SASB so much. We really recognize the key differences in operating models and profitability and economics of industry to industry. So with that, Neil, let me also go to the next slide, which is, no discussion with CPAs would be complete if we didn't talk about internal controls and assurance. And so what I want to remind you of, when we talk about internal control, what is that? I just would like to remind you that certainly the COSO internal control framework is a reference for you all to use as you think about ESG internal control or internal control over ESG reporting. Many of you will remember that when we revised the COSO cube to make it go from black and white to color, that middle piece up at the top called reporting was called financial reporting, and very explicitly eliminated the word financial so that the COSO internal control framework absolutely applied to all forms of reporting, of course, including sustainability or ESG reporting, so that now reporting is defined as reporting that is internal, external, financial, or non-financial. So please, as you think about this whole topic in your CPA role, don't forget the COSO internal control framework and how it can be helpful and applied. But let's talk about assurance. Clearly one thing that's coming out is people talk about greenwashing. So is one way to get over that greenwashing is third-party assurance. Today, there is, in fact, a number of companies that are getting forms of third-party assurance, either limited assurance with a negative assurance opinion or reasonable assurance. The publication over on the right is something that was developed by IFAC and the AICPA and SEMA on laying out the state of play of assurance all around the world. So it summarizes country by country the level and types of assurance that major companies are using around the world. As you can see here, there's a number of companies that are getting assurance, but there's still plenty that aren't getting assurance. On the next slide, though, something that I think is noteworthy, and Neil mentioned how well Canada is doing with respect to reporting on SASB. I think another thing that's quite different from many other countries, especially the US, is the involvement of accounting firms that are significantly the major provider of that third-party assurance. I would tell you, if we look at this in the US, it's more than flipped, and we have a very small percentage of accounting firms providing assurance. And if you peel the onion and get to the details on that, what you at least see in the United States with the S&P 500 is many of those large companies are getting third-party assurance on their greenhouse gas emissions only, and that assurance is generally being provided by some form of consulting engineering firm. So with Neil, I'll send it back to you.
Great, thanks, Bob. And let's turn the page here. This is now looking at alignment with other standards and frameworks. And this is such an important area, given the pain around the proliferation of standards and frameworks, the alphabet soup, as it's known. I prefer to call it a jigsaw puzzle because I do believe the pieces can fit together into a coherent picture. And that picture is now taking form faster than we could ever have imagined. So let's just start with SASB and the integrated reporting framework. Historically, integrated thinking principles, integrated reporting were around business decision-making, management decision-making, boards of directors, while SASB standards were positioned around investor decision-making, holistic investor view of the company performance. Now, with both legacy organizations together, we have this, as you see, complete cycle from business decision-making through external reporting, investor decision-making, and ultimately back a feedback loop back to improving performance. Now, the IR framework and SASB standards are already complementary and powerful when used together, and we want to make it even easier for businesses to use them together going forward. Now, consider how they fit together. Integrated reporting being an industry agnostic principles level, really how to report, while SASB standards, very much metrics based, are what to report, if you will. We recently produced a very important and useful guide to how they can be used together. And if you consider, I'll show you that on the next slide, if you consider really what SASB standards can do is reinforce integrated reporting's holistic, interconnected view of an organization's value creation process by allowing for that measurement and management of sustainability metrics. And also allowing for that comparability between companies to help improve performance. Remember that the SASB standards and the integrated reporting framework do remain separate, though complementary tools. And it's up to each business to decide whether one or both of them are applicable. As I mentioned, we have just come out with this new report, a white paper, looking at several companies internationally that are using both the IR framework and SASB standards and finding benefits to them. Now, another way, Samir talked about Brock University's announcement about SDGs. SDGs, of course, the roadmap for humanity, extremely important goals for the world, not just for business. And this is another way to consider how standards and metrics like SASBs can be applied to right across the board, and in this case to SDGs. We put out a paper that mapped the standards, the industry standards, to the sustainable development goals. And really what this shows is where is the sweet spot for business to apply itself to the SDGs. It doesn't make sense for, say, a software company to be working on hunger. It should be focused on education. It doesn't make sense for a food company to be focused on technology and inequity in technology. It should be focused on hunger and other issues there. So that's oversimplifying, but this provides that kind of map from what are the industry factors, where can business really make a difference, and what are the related sustainable development goals. Another way of looking at how standards and a framework go together is with TCFD, the Task Force on Climate-Related Financial Disclosures. And of course, again, very important around the world, investor attention coalescing on it, and an increasing number of regulatory mandates, including just last week in Canada, a new rule from the OSC that proposed to require TCFD reporting. Now, TCFD is an elegant framework, governance, strategy, risk management. How does an enterprise view climate risk through those lenses? And then metrics and targets. Now, TCFD prescribes scope 1, 2, and where material scope 3, but what about industry-specific factors? And that's where the SASB standards nest extremely well at the heart of the so-called TCFD onion. Now let's start looking at where things are moving now. And they're moving extremely quickly. And Bob, why don't you give an overview of how this is evolving?
Thanks, Neil. So the real, stand back big picture here is how do we get to, or can we get to one? Something similar to what we have for financial accounting purposes with IFRS, though many of you on the call would say we don't have one, we have two. We have US GAAP and IFRS. But nevertheless, over on the left-hand side, Neil mentioned we're taking that alphabet soup or the fog, we're trying to put it together in something that we call building blocks. And the organizations that are supporting this, like the World Economic Forum, IOSCO, IFRS, they've already bought into this idea of organizing these things, ultimately to get what I call the house that ESG built. So if you begin to see the items underneath the roof, that ultimately comes the objective, assurable reporting on environmental, social, and governance matters, but then not forgetting those broader societal indicators, many of which are in the GRI framework, and ensuring that ultimately those get reported in some form of integrated report. So that's where we're going, and organizations, as I said, like IOSCO, IFRS, the Value Reporting Foundation, of course, the big four accounting firms, the World Economic Forum, and we're all rowing in the same boat to get there. And I'd urge you to look at the IFRS Foundation website, and of course, SASB.org to get more information on the details of these efforts. Neil?
Great, thanks, Bob. And you know, the real headline here is the creation of an International Sustainability Standards Board by the IFRS Foundation. We strongly believe that the IFRS Foundation will take us to that next level of sustainability disclosure. Will actually complete the building of that house that Bob just described, truly making it part of the fabric of the world's capital markets. So IFRS Foundation has legitimacy. It has an IOSCO, that is the International Securities Regulators, overseeing it through a monitoring board. It's got definite market support, as was demonstrated in the consultation that the IFRS Foundation did around setting up an ISSB. It has commitment from all the leading initiatives, including TCFD and WEF, as well as the Value Reporting Foundation. It's really uniquely positioned to give the sustainability accounting standards a chance at success, considering that the financial accounting standards, the IFRS, are already required in more than 140 jurisdictions around the world, and really a proven model for due process and governance, and very much has the ability to launch that connectivity. So we are at an incredible moment in time here, a once-in-a-lifetime opportunity to build a global corporate reporting system, using existing standards and frameworks, as Bob showed, and respecting individual jurisdictional requirements, so consistent with this building block approach. Now, if you're not familiar with the IFRS Foundation, again, it's a not-for-profit public interest organization, but it's this interesting model in that it has the monitoring board of the securities regulators over it. And the proposed ISSB is suggested that it would stand as a sister board to the IASB that promulgates financial accounting standards. What is its strategy? This is what came out of the consultation that the IFRS Foundation did. This is the direction that we expect of an ISSB. And again, the ISSB does not yet exist. We expect it to be announced at COP26 in Glasgow in just a couple of weeks. In fact, as soon as next week, when COP26 gets underway. This is what the focus is going to be, an investor focus, the information needs of providers of capital, of creditors, equity investors, lenders. It's going to start with climate, because that is one of the most pressing needs, and it's got to start somewhere. It can't do everything at once. So the ISSB will start with a climate standard, but it will quickly expand right across the spectrum of ESG issues to social and human capital issues as well. It's going to be a global baseline of standards, again, focused on enterprise value and focused on the information needs of investors. And the IFRS Foundation has made it clear that it will build on existing standards and frameworks. Quick look at what a climate prototype would look like, what a climate standard would look like, and for that matter, what any ESG standard under the ISSB might look like. This is a lot of the work that the Value Reporting Foundation has been doing in a technical readiness working group. This group is working to provide the ISSB with a running start. We can't preempt the work of the ISSB. There's a lot of due process that it has to go to create credible standards, but we've been doing a lot of technical work to, again, provide a running start. The climate prototype, I look at it and what I see is TCFD plus. This is recognizably TCFD, the 4 pillars of TCFD. governance, strategy, risk management, and metrics and targets. There's a layer of narrative reporting. There's a layer of industry agnostic or cross-industry metrics. In climate, for example, scope 1 and 2 greenhouse gas emissions. And then there will be a layer of industry-specific disclosure standards, so important for investors to be able to assess performance and for companies to be able to benchmark and guide their decision-making. So what can you expect from the Value Reporting Foundation? Ongoing guidance, how to use the Integrated Reporting Framework and SASB standards together. We want to more closely align those concepts. You can expect more insights and case studies about how these tools influence decision-making, both corporations and in the investment world, as well as continued support, very strong support for the global efforts to create a comprehensive corporate reporting system. This is, I won't go into this, but these are some links around the SASB standards and around implementation. So that concludes our prepared presentation, and we'd now be very happy to entertain discussion and questions. Samir, thanks again for having us here today.
Thank you very much, Mr. Hirth and Mr. Stewart, for this very interesting, very stimulating presentation. We will go ahead and take some time for question now. First question is around greenwashing. And the question is, if it's all about greenwashing, how investors are going to sort out the immaterial from the material information? How does this apply to us if the focus is all on getting the most dollar into the entity? And I would kindly request to keep the answer short so we can accommodate. We have a lot of questions.
I'll jump in on this one first, and then you go, Bob. But greenwashing is such a concern. You're so right. We have to unleash trillions of dollars in investment to help solve the climate crisis, to help solve problems of inequity and so many other problems. How can we guide that capital to where it will have the most impact and not guide it to where it won't have an impact? We've got to have a clear understanding of companies' ability to make a difference, and investors need that to guide that capital. Now, the answer, very simply, is with standards. If we can agree on the information set, if we can agree on definitions, if everyone is speaking the same language, then there's no hiding poor performance, and good performance can be communicated very, very clearly. SASB standards are, like I said, that industry-specific subset. If a company reports on all of those factors, they're really controlling their story, getting a very clear picture, and investors will have a full understanding. If they're skipping over any metrics, right away investors say, what are they hiding? Are they cherry picking? What's missing from this picture? So that's where standards really help provide that baseline of communication and understanding between companies and investors and help prevent greenwashing.
Yeah, and then Neil, I would add, if we have that set of standards, right, that's a huge step forward. But then I'd like to suggest, probably or unfortunately, we need what I call the trust but verify approach, which we've had for financial accounting purposes. We've got standards for financial accounting, but I'd like to suggest positively, it's so important and so critical, we have to have the third-party assurance. So whether it's a silver bullet or not, we'll see. But let's add on top of this to standards the third-party assurance activity, which we're already seeing. And as I've said, I believe that's clearly baked into the plans that the IFRS Foundation has around ESG reporting.
Second question is, how can SASB respond to investors' information needs with regard to green innovation?
So green innovation, so, innovation, opportunities. This is not just about risks. It's about opportunities, right? It's about the positive benefits to business. And I think this is where it really is one of the differentiators for the SASB standards, in that we're not just looking at some kind of like an absolute number, like what is your greenhouse gas emissions, but rather what are you doing to improve to reduce greenhouse gas emissions. And not only what's coming out your smokestacks, but what about the products that you're designing? What about the supply chain? And how can you make an impact there? So this is where SASB standards are separated and really play into green innovation, is what are the levers available to management and how are they deploying them? How are they, and that applies very much to innovation around products and services and really finding those opportunities, not just avoiding the risks.
And Samir, I would say that while we don't have a specific standard around innovation, what's really happened with this ESG reporting is companies tell their story. They've actually added into their story how they have innovated. So there's examples of companies that changed out equipment or bought new equipment that does something different than before. Or they've changed their packaging in a really innovative way that has substantially reduced their carbon footprint or the weight of those materials or whatever. So again, we may not have a standard on innovation, but we're seeing, as I'll say, as part of the marketing story, companies really touting the changes they made that are innovative. And to Neil's point, for all of the reporting and all of the risks that are out there, it's interesting to see a number of companies that are capitalizing on this concept and coming out with new products and services that tie directly into ESG and the innovation of each of these factors.
Thank you. Most sustainability standard being developed seems to focus on private industry and investor decision making. Could the panelists comment on the role of sustainability standard in the context of the public sector and government reporting?
Let me start with that, Neil.
Sure, go ahead,
I think that's the big piece that's missing. I know that we've got limited resources at SASB, but we all have to contribute to this, and the private sector is only part of that. So I absolutely believe that the public sector, state and local governments, federal governments, utilities, airports, all of those can play a part. And I would hope that they can look to some degree to the SASB standards, but that is something yet to come. And it may be that we expand SASB to cover public sector or there's regulations, but absolutely agree. It's a critical set of pieces of the puzzle that need to be added in there for us to get to the goals we must reach.
And I would just add, this is where integrated reporting really plays a powerful role. Integrated reporting already used by public sector, by local governments, by public sector enterprises in many parts of the world. It's a powerful tool in terms of being able to measure what are the value drivers that go into success and what are the outputs and outcomes from the activities of the entity, be it a business or be it government or public sector enterprise. So I would look to integrated reporting as well as the relevant elements of the SASB standards as really good tools and resources for public sector.
This question is around ESG reporting insurance, and Mr. Hirth alluded to the COSO framework. And the question is, why are we not using our own COCO or CA standard and guidance? COSO is not the only sources of authoritative guidance and standard. So what do you think of that?
Absolutely. There are suitable frameworks that have been identified country by country. So I think in your case, you should absolutely look at your COCO framework. I'm coming obviously from my biased American accent, former COSO chairman role. But I think that what's important is, there's material out there that will help us all create a standardized set of thinking when it does come to assurance, when it does come to actually defining what is effective internal control over ESG activities and ESG reporting. So absolutely agree with the question that came out.
Does SASB help investors evaluate the persistence of company ESG performance, specifically the persistence of GHG gas emission reduction? How are SASB measures quantified?
So there's about well over 900 different SASB measures across the 77 industries, right? So there is a wide range of different measures. 80% of them are quantitative. And they're quantified in different ways. Maybe it's greenhouse gas emitted. Maybe it's number of securities breaches for data security. Maybe it's percentage of gender diversification in the workforce and racial diversification in workforce. So many different ways that are quantified. Now, how do they identify the persistence? They identify improvement. Well, again, that's the purpose of standards, right? They're consistent over time, so you can measure the progress of a company or lack of progress, and they're comparable between companies, so you can compare and benchmark performance. We do encourage companies to report in a time series. Now, most SASB reporters today will just report a single year, and it's up to the user of the information to be able to go back and compare, find the baseline, and see if there has been improvement or not. Some of the best reporters include 3 or even 5 years of data, so that the directionality is very clear. So yes, SASB standards are purpose-built to allow for that, for investors to understand the persistence of improvement or lack thereof.
Could the high number of Canadian disclosures actually be a kind of good news, bad news story? Good, that this company is gaining traction. Bad, because this could be an attempt at greenwashing. And the questioner, the participant asked, look at the number of resource company jumping on board. The empirical evidence suggests a negative shareholder stock price response to mandatory disclosure of ESG, and ESMA is an example.
So Samir, I don't know if I can get in the head of all the Canadians and Canadian companies. Obviously, I'd like to suggest that the Canadian companies are responding positively. They're responding to investor interest. I don't have the statistics on the performance of those companies that are reporting versus those who are not. I would tell you in the US, it's the opposite. When you look at the companies that are spending the right amount of time and attention on ESG factors and are reporting that, when you make a comparison of what we call the S&P 500 overall to the S&P ESG 500 index, the performance of those ESG or better ESG companies is, I'll say, reasonably significantly better than that overall average. So can't really respond on Canada, but I guess we'd still like to say we want to be complimentary about the take-up of Canadian companies. I think it in a way it is showing innovation. And I think over time it will show those companies are better. They will end up being more valuable. More people will want to go to work at those companies. More customers will want to buy from those companies.
It's an interesting question, isn't it? And you think about, well, why are the extractives and the resource-intensive industries some of the first to adopt SASB standards? I don't think it's because they're trying to hide anything or get across a false story. I think it's because they face the biggest risks. That's where the sustainability risks are most intense, and that's where companies really have to face up to those risks and report on them, and that's where investors are demanding that they do so. Again, I said it before, but standards are defense against greenwashing, not an assist, right? So if you're reporting in consistent, comparable standards, you're reporting a complete story. You're entering into that data-driven, metrics-driven dialogue with investors. It's not greenwashing. It's taking control of your story, and it's agreeing on a common language and getting that feedback loop going with investors. So I have a bit of pride in this. I live in New York now, but I'm originally Canadian. I come from Montreal, and I genuinely compliment Canada's companies and investors for being some of the first to take on SASB standards. But that also builds on a long history of sustainability priorities that Canada has.
I'm going to take the advantage being the moderator and ask a few questions. My number one question is, standard setting around sustainability reporting kind of tend to advantage comparability and reliability at the expense of relevance, How SASB mitigate that? How SASB kind of find the right balance between providing reliable but company-specific and relevant information.
Well,
Do you want to go, Bob?
yeah, Neil, I think the basic tenet we have around materiality works on relevancy. You know, we're not asking every company to report the same thing, which would not be relevant and not be material. So I'm sort of, you know, using relevance and materiality in the same way. And of course, what you see again, not that SASB requires it, but time after time, report after report, many good reporting companies talk about how they arrived at their material issues. And the way that their reporting is relevant is based upon the actual polling and discussion and meeting with their stakeholders. So face-to-face with employees or with customers or with their investors. So I think we get to the relevance to a point, but we also see that just the reporting by companies is getting to relevance, but by what I call their own materiality assessment.
Just to build on that, the standards are created to allow for that standardization, but also the flexibility in recognition that every business is different. And first of all, every industry is different. That's why we need industry specific standards. But even within industries, there's different business models and different factors that are more important than others. While we provide the subset of topics that are likely to be material or relevant to a typical company, that's the likely and typical case. It's still up to every business to assess which of the topics that really do apply to its business and are the accounting metrics appropriate for measuring performance. We have a report or explain structure with the SASB standards. Our standards application guidance asks reporters to report to the full standard, but if they need to omit or modify a metric or a topic, then simply to give the rationale. And there's perfectly good reasons. It may be that a particular metric is not relevant to the business. It may be that a metric needs to be changed because of regional differences, industry norms, say in Canada, that they follow rather than say an EPA guideline and that for American companies. It may be that they don't have the data yet, but are working on getting it. Or it may be that they can't report it for competitive reasons. Whatever the reason is, the user of the data, the investor, finds that very valuable to have that information, that context. That provides insight. So even when a company doesn't report a piece of data, the reason why provides the investor with insight into that company's ESG performance. So I think the answer is that yes, it's true as a challenge. This question that you asked, Samir, you put your finger right on it. There is this challenge between balancing standardization with the company's flexibility to truly be able to tell its story. That's exactly what Bob and the Standards Board focus on, is getting that balance right. We continue to work on that and to do that with the market's input, with the feedback from investors as well as companies.
This is a great question. And I'm gonna related to the question I'll be asking. You know, whenever we talk about standard setting, we tell our students there is two words, the word of principle-based and the word of rule-based. And I don't know how I don't know where SASB standards are with regard to these two approach, but I'm going to connect it to an interesting question. If you think of SASB as a traditional gap disclosures, what about non-SASB sustainability disclosure, given all this is a new evolving frameworks?
That's an interesting question. And this comes up a lot with in my conversations with companies, is we'll talk about the SASB standard for their industry. And they'll say, well, we can see how this all applies to enterprise value. But where, for example, maybe it's an oil and gas company, and they say, well, where's diversity? Diversity and inclusion, such an important issue now for our employees, for the communities where we do business, even for our customers. Why isn't diversity in the standard? Now, it's true that it is important to many stakeholder groups. It's not material to revenues, costs, or risk, and thus cost of capital. And so it's not in the standard. But there is definitely scope for that non-SASB reporting, as you say, Samir, and it's extremely important. This is where we're going with what we call the building blocks approach and the global baseline, right? We need a global baseline for comparability to be able to direct capital. We need that set of standards focused on the information needs of investors, focused on enterprise value. But what about that non-ISSB reporting? That's where the second building block comes in, right? That's where the jurisdictional requirements and priorities come in. So, for example, in Canada, it might be about resource conservation and Indigenous peoples. I did an event last week for South Africa. In South Africa, it might be about Black economic empowerment. In Europe, there's a very clear set of sustainable development priorities and the EU Green Deal. And that's where that building block will come in. So we need this global baseline of call that the SASB metrics driven. I prefer metrics driven than rules based. That's where the global baseline is. And then on top of that, you've got the sustainable development, policy oriented goals and reporting.
I have a last question. How do you see the new ISSB impacting SASB? Will the ISSB adopt SASB, and when might that occur?
The IFRS Foundation has been making incredible progress towards the establishment of the ISSB. We've been very lucky to be involved in the Technical Readiness Working Group. The IFRS Foundation has made it clear that as part of the strategy, they want to try to base it on existing standards and frameworks. So WEF IBC, TCFD, CDSB, and the Value Reporting Foundation with SASB Standards and integrated reporting, we've all been contributing to this technical work, to this running start, but there is no ISSB yet. They have their work to do, and we can't preempt that work. So we very much look forward to seeing how this takes shape. It's gathering tremendous momentum and support. And yes, let's look for next week, COP26. We should find out much more.
This last question is for a discussion we had with Mr. Hirth before we start the webinar. Many companies are certain to become net zero at some point in time in the future. Are the SASB standards robust enough to validate these assertions? Mr. Hirth?
So, Samir, I would add that the standards aren't there to suggest that net zero is where people want to go. The standard is with respect to disclosure of certain items like greenhouse gas. So we have a standard in certain industries where we determine that it's financially impactful material to have greenhouse gas emissions disclosures. We have protocols and explanations as to the protocols you use to make that calculation, but we don't go through the quantitative discussion about, and you should be net zero. So again, as a standard setter, we're laying out the standard. We're not laying out what the answer should be company by company. But Neil might have a comment on this as well.
That's a great point. Yeah, we don't call for some kind of magic number that you can get to at some magic date in the future. This emissions minus offsets and by 2030 or 2040. What the SASB standards do is focus on the management levers for improvement, for mitigating risks and making more positive impacts. So instead of a scope 3 number, it's about product design for more fuel efficient or energy efficient products. Instead of, again, a scope 3 number, it might be supply chain management. How well are you managing for environmental impacts in the supply chain? So rather than some, how much and when, we're looking for how are you getting there? That's what SASB standards help to assess.
Thank you. It looks like we covered all of our questions, Mr. Hirth and Mr. Stewart. Is there anything else you want to cover before wrap up?
Samir, I would just like to add a couple things. One is this is not going away. It's here to stay. It is no longer seen as a cost, but this is a way for companies to be better, to be more attractive to employees and customers, to ultimately be more profitable, and yes, to contribute to an issue that impacts us all with respect to climate, the use of the limited resources we have, and the fact that we have soon 8 billion people living on this rock we call Earth.
Yeah, and I would just say this is not ESG reporting is not an end in itself. This is about making better decisions, improving performance, and making that difference that Bob described. And finally, I would just say thank you very much to the CPA Ontario Centre for Public Policy and Innovation in Accounting, and we really appreciate this opportunity to speak to you and to the warrior accountants who are listening.
Thank you very much, Mr. Hurd. Thank you very much, Mr. Neal. Thank you, everyone. It was a pleasure being with you. Stay safe, stay healthy. More importantly, stay smiling. I will hand it back to Dr. Brown for concluding comments.
Thank you, Samir. Thank you, Mr. Hurth and Stewart. This could not have gone better. We needed more time. I am sure that you'll all agree with me that this was a fact-filled and fruitful discussion on a very important subject, and the dialogue doesn't end here. So this was a follow-up event. We're thinking of a follow-up to this follow-up event in another couple of months. So please be on the lookout for other events that are organized by the center. Please join me in thanking Mr. Hurth and Stewart for sharing their expertise with us, and to Drs. Wells and Godez, and to Mr. Smith for their continued support, and to Dr. Trebelsi. Thank you so much for organizing this event. It could not have been successful without you. I want to also thank the rest of our BRAC team, Susan LeBlanc, Caitlin Little, Hania Holwani, and to the members of the CPA Center, Drs. Pacharn, Lee, Ho, Gong, Lee again, Elian, and Soyangwan. Thank you all for attending. We will confirm your attendance by an email. And some of you are asking about the Warrior Accounting article. We'll send you a link to that, as well as to the PowerPoint slides. Thank you all so much for being here today.